Welcome back to the Elite Economizer, where we focus on giving you the best financial insights to help you navigate today's economic landscape. If you're here, you're probably wondering what's happening in the housing market. Are home prices going up or down? What about mortgage rates? Let's break it all down for you with the latest predictions for 2024. Now, before we dive in, I just want to say this. If you're thinking about buying or selling a home in the next year, this video could save you from making costly mistakes. So stick around and make sure you don't miss a thing. Let's start with home prices, and remember, we're talking about national averages here. The National Association of Realtors has forecasted that home prices will rise by about 3.5% by the end of 2024. That's slower growth than in previous years, but still upward momentum. Looking ahead to 2025, they predict an even more modest rise of 1%. Other organizations like the Mortgage Bankers Association are a little more optimistic for 2024, expecting prices to increase by 3.9% and then by 2.7% in 2025. Fannie Mae has taken an even more bullish stance, forecasting home price growth of 6.1% this year, followed by 3% next year. So, what does this mean for you? These predictions are based on a few key factors that are driving prices upward. First and foremost, mortgage rates are expected to drop slightly in the coming months, which could push more buyers into the market. Second, inventory remains low, meaning there just aren't enough homes available to meet demand. And third, there's pent-up demand from buyers who have been waiting for mortgage rates to come down. So, what's the takeaway here? Experts are pretty much in agreement. Home prices are going to keep rising, albeit more slowly than before. But don't expect a dramatic drop anytime soon. Now, let's talk about what's happening in the market right now. Over the past 5 years, home prices have risen steadily. As of this year, home prices are up by 3.9% compared to last year. Month over month, there's been a slight dip in prices, but that's perfectly normal for this time of year. We typically see a small decline from August to September as the market cools after the busy summer season. But here's where things can get confusing. You might hear people claiming that the housing market is crashing because list prices are coming down. Well, here's the reality. List prices don't matter nearly as much as sales prices. It doesn't matter what a home is listed for if it's not selling anywhere near that price. The truth is that homes are still selling at higher prices than they were a year ago, even if the list prices are coming down. Think of it this way. If I were to list my home for $1 billion today and drop it to $100 million tomorrow, I could make a video claiming a 90% crash in list prices. But does that mean the housing market is crashing? Absolutely not. What really matters is what homes are actually selling for, and right now, they're selling for more than they were last year. Now, a lot of people want to know, what about mortgage rates? Well, it's been a wild ride for mortgage rates over the past couple of years. Rates skyrocketed when the Federal Reserve started raising interest rates. But now that the Fed has paused its rate hikes, mortgage rates are starting to come down. Currently, the 30-year fixed mortgage rate is sitting around 6.5%. That's lower than it's been in recent months, and many experts think it's unlikely that we'll see rates go back above 7%. The Federal Reserve is expected to cut interest rates further over the next few months, which should help bring mortgage rates down even more. But here's something important to understand. The Federal Reserve doesn't directly control mortgage rates. Mortgage rates are influenced by the 10-year Treasury yield, which the Fed has an indirect impact on. So, while rates won't drop overnight, we do expect a gradual downward trend over the next year. Now, I know what you're probably wondering. Will mortgage rates ever get back down to 3% as we saw a few years ago? The short answer is probably not. The Fed's goal is to get their benchmark interest rate down to around 3% by the end of 2026, but that doesn't mean mortgage rates will follow suit. Even if the Fed achieves its target, mortgage rates are likely to stay in the 4% to 5% range. However, there could be a brief window of opportunity where rates dip lower, especially if the Fed makes more aggressive rate cuts than expected. So, if you're looking to buy a home in the next few years, keep an eye on interest rates. There might be a chance to lock in a better deal. Now that we've covered home prices and mortgage rates, let's look at the overall housing market situation. And honestly, It's not looking great. Inventory levels are up 13.6% year over year, which sounds like good news. But if you zoom out and compare that to pre-pandemic levels, inventory is still down by almost 28%. The issue is that even though more people are listing their homes for sale, affordability is a huge barrier. Fewer buyers can afford homes at today's prices and interest rates, which has led to a significant slowdown in the number of homes being sold. This year is shaping up to have one of the lowest numbers of home sales in recent memory, but that doesn't mean home prices will crash. Remember, a true crash requires a flood of homes hitting the market, and that's not happening right now. We're in a housing market slump, not a crash. Before we continue, if you're enjoying this video, don't forget to hit that subscribe button. Here at the Elite Economizer, we bring you the latest insights into personal finance and the economy to help you make better financial decisions. So, what does all of this mean for homeowners and prospective buyers? Well, for homeowners, the good news is that your property is likely worth more than it was last year, but that doesn't mean it's smooth sailing. Property taxes and insurance costs are rising, which is putting a strain on many household budgets. And for those looking to buy, the situation is even tougher. Not only are you facing higher home prices, but mortgage rates are still much higher than they were just a few years ago. If you bought your home before 2020, consider yourself lucky. You're probably sitting on a lot of equity and enjoying a low interest rate. But for anyone looking to buy today, it's a much different story. Home prices have increased by more than 40% since 2019, and mortgage rates are nearly double what they were back then. It's a tough market for buyers, no doubt about it. So, what's the solution? In my opinion, the only way to make homes more affordable is to build more of them. But here's the problem. Home construction has been declining over the past few years. Both labor shortages and rising material costs have made it harder for builders to keep up with demand. There's also the issue of regulations. It's going to take a concerted effort from both the government and private industry to ramp up home construction. And while both parties have proposed plans to address the housing shortage, we'll have to wait and see if any of them make a difference. But here's the thing. If mortgage rates fall too quickly, we could see home prices spike again, which would make affordability even worse. The root of the problem is a lack of supply, and that's what needs to be addressed if we want to see long-term improvement in the housing market. That's all for today. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe to the Elite Economizer for more personal finance tips and insights. Thanks for watching, and we'll see you in the next video.